Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Landy Burt, the Dividend Diplomats. Guys, today we are going to talk about a stock that's yield soared over 3% finally after it was crushed after earnings were released. This stock dropped 11% in one day, sending that yield climbing.
Guys, before we jump into this stock, smash that subscribe button. Give this video a nice thumbs up. Let's hit this video hard here. Happy Saturday morning. Happy weekend. Get something warm because I'm sure you guys are freezing if you're here in any part of the United States right now. I know everybody's kind of going through something right now.
You know what that means, Lanny? If this video gets to 400 likes, we're going to pick one subscriber that comments in the video there to send a Dividend Diplomats coffee mug to, because we need you to stay warm in this weather by drinking coffee, tea, or even that hot cocoa.
So, Bert, you said it. The earnings releases are coming in hot and heavy. S&P 500 is kind of flat so far year to date. A little interesting right now, but things are not to say things are cracking, but certain industries are showing some cracks in the economy possibly. This stock in particular dropping over 10% on the day this earnings was released, but that propelled that dividend yield to swell up to over 3%, and they have a double-digit growth rate.
Yeah, that's right. The company we're going to talk to you about today is Discover, ticker symbol DFS. All right. They got demolished today, and I think the official one was down 10.8% after they released earnings after Wednesday. What happened in their earnings release? They just missed everywhere. They missed, and the results were terrible. Earnings per share missed the analyst expectation. GAAP earnings for the quarter were $1.54. Average annual estimates were $2.47. Landy, they weren't even close to hitting that GAAP EPS. And on top of that, they were down from $2.59 in the previous quarter, $3.74 in the same quarter last year. That's $1.54 per share this quarter in GAAP EPS, $3.74 last quarter. That, Landy, is a huge drop.
I'm just reading it now. It's a big drop, but there were some bright spots. They still had earnings. That's always solid, always positive. They did grow their deposit base. Obviously, I think they have a nice high yield savings account at Discover. I think they even have debit rewards on top of their credit card rewards. So trying to be a little bit different there. Their sales volume did rise as well on the credit card side. Credit card balances were up. No shock there. So growth happened at Discover. Now there's going to be some, short-term bumps, along the way with that growth, as well as consumer debt sitting at pretty much an all-time high, which is going to lead to some high charge-offs in the current state of the economy.
And that's exactly what you started to see happen. Their average credit card loans were $99.6 billion, so almost $100 billion in credit card loans. That was up from $95.8 billion in the previous quarter, but you did see the charge-offs start to rise. So they increased to 4.68% in the quarter, up from 4.03% last year, up from 2.37% from Q4 2022. What does this mean? It's exactly what Lanny said. Loan balances went up. People aren't paying back their cards, and the performance of the portfolio is coming down.
Yeah, unfortunately, usually the American consumer, I believe, does the complete opposite. Anything that's secured by collateral, they'll rather pay that first, and then comes the unsecured high rate debt, because they want to keep their house, they try to keep their car. But this unsecured credit line from Discover is probably the last one on that bucket list to pay.
That's right. And if you're thinking about it, what did we hear over the last year? High inflation, high spending. Couple that with the U.S. consumer still spending at record paces. There was only so much money to go around, and that's where you're starting to see some cracks in Discover's credit card portfolio. And if you're paying attention to other bank earnings releases, you're starting to see the cracks of performance flow through there.
And that sent the stock price down, as Bert said, 10.8% today. And man, oh man.
So you're right, Lanny. After that 10.8% drop. They just closed at $97 per share. So you know what this means, Lanny. What do we need to do now for the rest of this video?
Got to run through the Dividend Diplomat stock screener, guys. Focused on the three metrics: PE ratio less than the S&P 500, payout ratio less than 60%, trying to get in at 40 to 60% sweet spot. That perfect payout ratio. History of growing dividends as the third metric. And last but not least, the bonus metric, the dividend yield. $97 share price for Discover, down, let's just call it 11% today here on January. What is today? The 18th?
Sounds about right to me. It's almost Royal Rumble time is all. That's how I'm viewing these days as. All right, so let's run it through there. 97 earnings per share is 1271. It's a PE ratio of 763. So single digit, very low PE ratio. And all right, so we pulled these from Yahoo Finance. We've pulled them from Seeking Alpha. That's where we get them. Let's just assume the analysts haven't caught up to that and they haven't taken the little haircut from this earnings release. Let's just put in 10 for Discover just to see what happens. It's still a single digit PE ratio of 9.7x. So it's a very low PE ratio for Discover.
Yeah, you're still rocking a low PE, even if you cut it down in half, again, put it at 6, you're still at a 16 PE. Again, you're still pretty undervalued right now with the safe dividend payout ratio, because they pay us 70 cents per share per quarter, $2.80, currently at 22%. But if you cut the EPS down from 12.7 down to 6.35, you're still at 44%. So you've got a very low dividend payout ratio. Dividend safety score here is high, and I see growth still in the future.
Yeah, their 5-year dividend growth rate is 12.47%. They've increased that dividend for 13 consecutive years.
Ever since the crisis.
Yeah, they've come back, but also they have that low payout ratio. So even if the rest of 2024 is going to be tough, they still got plenty of room to keep maintaining and increasing that dividend.
That they do. That dividend yield is just so close to 3% at 2.89%, guys. Let's see that thing swell up.
Yeah.
If we get to that, mid 94 range, low mid 94s, you'll get there.
Yeah, for the sake of the video, we're going to say it rounds up to 3%, though, because it's much more fun to say that 2.89 rounds up to 3. It's a stretch. That's what we've been saying so far, so we're sticking with it. It's close.
That 5-year dividend yield on average is 2.27%. So you're getting over 60 basis points higher right now than that average 5-year dividend yield on this dividend stock.
Yeah, they're down 13.65% today. Most of that came from today when they dropped 10.8%, and they are down 4.81% over the last 52 weeks. So what does that tell you? Their stock went up and it just came right back tumbling down now. They're basically back to where they started 52 weeks ago.
Yep, all because of today, guys. So the question is, Bert, what are you thinking about Discover, brother?
Yeah, it's an interesting one to keep on the watch list, especially as earnings season continues, as you see what happens. If the sentiment continues to get negative, you start to see performance. There's a chance that Discover even falls to that $90 share, 85-90 range. And that would be a great time to potentially pick up DFS and add to it if it's a new position, or add to your current position, or build a new one in your portfolio.
$90 buy target price point right there from Bert and Lanny, because I would agree on that, guys. Are you buying Discover Financial Services, DFS? Are you buying this stock right now as stock market continues to show a little bit of uncertainty so far to start the year off in these first few weeks of January 2024? Let us know what you think about Discover in the comments.
If you haven't already, subscribe to the channel, give this video a thumbs up, and remember, if you're not with us, you're against us, Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.